Give me the filler, though I can start. ओपन कर दिया आपने for public के लिए.
Yes, sir, you can start.
Start. Good evening, friends. I am your host, K.K. Gupta. On behalf of the Association for Financial Advisor of India and Resurgent India Limited, we welcome all our participants. I am happy to know that more than 500 registrations with us, beside the YouTube and other Facebook, etc. I think on the demand of the public, to this important webinars, we have envisaged. That means the webinar is of great importance, corporate governance and the economic development in that place. So this webinar is having a eminent speaker like Dr. Amarjit Chopra. He is a past president of Institute of Chartered Accountants. When I send the fillers to the banners to my banker friend,
Water.
Mr. Chopra, he always obliged us in all of webinar. In a short notice also, so he used to come. I welcome Dr. Farid Ahmed, who is a former ED of Punjab and Sindh Bank. He also blessing executive development program, and people do remember him for his knowledge about the leadership and other administration qualities. So he is also with us. We are with us, Mr. Ishwar. Who is also a banker, he was general manager with Central Bank of India, adding various departments to the banking sector. Besides that, he was a senior consultant with Indian Bank Associations. So he was also, you can say, for this webinar, he is the main speaker also. And he drafted all the questions and all the talking point also. And I am thankful, Mr. Subbarao, who said that this is architect of this program of Subbarao. Subbarao talked to me in respect of this webinar. So he told me, let Gupta, we should look at corporate governance. This is most important subject for the so it play a very important role. Either you talk about the shareholders, stake or stakeholders, they nominate the person of the board of directors. And board of directors constitute so many committees. You see that it should be corporate governance. If the corporate governance of any corporates is proper, that company, that corporates can have a more profit. Cost reduction can also be there. Cost of capital will also be reduced beside the profitability. These are the major aspects which we are talking about. The system by which form are directed and controlled is called a corporate governance. I will not take much time. I'm coming to Sri Subbarao sir. Subbarao is BCom, CIB, FCA, Bachelor Finance from ITVM, Institute of Financial Market, New Bombay, and he was also professor in National Institute of Bank Management, Pune. And he has so many awards with him. So he is also member of the Banking, Insurance and Pension Committee, Interview Panel Committee of IBPS, an appointment as IGRP, Single Member Panel by NSE Bombay Stock. He has been recognized as excellent contributed for the growth of Central Bank of India and Punjab and Sindh Bank, facilitated by Honorable then Finance Minister Shri Mukherjee on 21st December 2011. Since he is the architect of this program, I am not taking much time to give an introductory something about the theme or what is the theme of this webinar. So I request Mr. Rao to give a brief. What he was thinking about this program and what his mind is there. Then lastly, I will summarize him. He will summarize the position, whether this webinar was a successful, what he was thinking. So I hand over to Mr. Subbarao. Subbarao, sir, please.
Yes, sir. Good afternoon, friends. I start this webinar on corporate governance during my lectures on corporate governance, which has been appreciated by the students. The quote goes like this: behind every
Sir, आप
fortune,
video on कर लीजिए, sir. Video is not there. Please on your video.
video
is there.
Video is there.
It's there.
Getting it. चलिए, okay, go carry on.
Now you are you able to hear me?
Yeah.
Yes, yes. Yeah, we are able to
Okay.
hear.
Okay, I repeat again. Good afternoon, friends. I'm delighted to meet old friends. This corporate governance topic is a very live topic all over the globe, and more so in India. Generally, I start this topic with a quote which goes, behind every fortune, there is a crime. This is a epigraph, The Godfather, penned by Mario Puzo. But who attributed this quote to Balzac? I have coined a quote for our banking industry. Behind every NPA, there is invisible bribe, but innocent hands are punished mercilessly. As on date, the outstanding provision is around 17 lakh crores, constituting 20% of the loan book. This all had happened during the first decade of 2000. Slowly, because of the good corporate governance, because of this IBC, because of the recovery process, because of the digitization, recovery started flowing in. More than 25 to 30% of the NPA amount could be recovered. If this entire amount is recovered, I'm confident the public sector banks will again boom. The corporate governance speaks about two pillars. One is the accountability and another is the transparency. The person who exercises authority is supposed in the normal course to assume the responsibility too. But in our earlier system, somebody exercises authority, but somebody pays the penalty for it. Somebody takes the decision and somebody pays the consequences if it goes wrong. The corporate governance earlier was almost absent in most of the public sector banks. All the stakeholders. You see, the major shareholders are the equity holders. In America, too, there was a problem. In Enron, that time, this stock market blue-eyed boy, they adopted very innovative accounting system. Arthur Anderson, the oldest audit firm, too appreciated that innovative accounting system. In that, Enron sets up any power project, whatever projected profit is being shown as their realized profit. That is the mark-to-market accounting instead of historical cost. That has landed the company into problems, and the company put the shareholders to a loss of over 700 billions. In Indian rupees, it works out around 5,85,000 crores. And in our India also, perhaps you are aware, Satyam Computers, which was the corporate account listed company, became a bankrupt in 2010. That was followed by Kingfisher Airlines, Jet Airways, Bhushan Steel. In PNB, Nirav Modi, Mehul Chokshi, Gitanjali, and ILFS, DHFL, PMC, and Yes Bank too. Yes Bank was promoted by a professional banker. He also fell prey to the temptations and put the bank to great loss. That's why corporate governance is very, very essential for protecting the interest of all the stakeholders. You see, if you see the economic growth, you see, I could get some statistics that when India became independent, the first finance minister, Mr. R.K. Shanmugam Chettiar, he submitted the financial report and the first budget on 26/11/1947. That time the GDP stood 2.7 lakh crores only. Now during the past 75 years, now we have reached a GDP of over $3 trillion. Now we have been recognized as the fifth largest economy in the world, even surpassing our so-called one-time masters, British. That's why if you maintain good corporate governance, certainly we can achieve greater heights and we can get name and fame, and all the stakeholders will be richly benefited, and we can have the benefits reaching the entire stakeholder community instead of confining to the only promoters. Okay, these are my preliminary remarks. After listening to all others, I will make my final comments. Thank you.
Gupta ji, you are on, please unmute yourself. Gupta ji. Gupta ji, unmute yourself.
Sorry, sir. Thank you, Mr. Subbarao. I think you have touched very right point. If the good corporate governance is there, definitely the profitability, economic development can also be there. Then our dream of the Honorable Prime Minister for 5 trillion economy can also be for that. And what you are mentioning about the absence of the corporate governance in the banking sector, I think expert will come. Here, Fareed Ahmed sir, I will request him that he can speak on the subject. Now I'm coming to Mr. K. Ishwar. Mr. K. Ishwar is BCom, CIB, and postgraduate from XLR, has vast experience in the field of banking and has worked in 4 decades in Central Bank of India. His tenure in Central Bank include position of General Manager Credit, General Manager Treasury, International Banking beside Field General Manager Hyderabad. He also worked as a senior advisor, corporate banking at IBA for 5 years. He also holds a position in research in India as executive director. Mr. Ishwar, just I want to know from you. So, what precisely the corporate governance is, and how did the whole concept of corporate governance framework evolve in India? Have any view of Mr. Ishwar?
Yes. Thank you, Gupta ji, and thank you to Association of Financial Advisors for giving me this opportunity to be speaker in this webinar. Um, and good evening to Mr. Subbarao ji, Dr. Amarjit, Sri Surendra Pal Singh ji, Dr. Farid Ahmed ji. So in my initial part of my discussions, I will speak about, as Gupta ji said, about precisely what is corporate governance. And then in the later part, I will talk about how the corporate governance evolved in India, including how the regulatory interventions came at various points of time. And in the banking sector also, how RBI intervened of late about the directives for the corporate governance in the banks. So if I have to define in one sentence, so what is corporate governance, I would say good corporate governance is simply good business. Corporate governance is basically a set of systems, processes, principles, which ensure that a company is governed in the best interest of the stakeholders. And essentially, it has to ensure commitment to the values and the ethical conduct of the business. And as Subbarao told, transparency in the business transactions, besides that, statutory and legal compliance, adequate disclosures, effective decision making to achieve the corporate objectives. These are some of the components of the corporate governance. So in other words, the corporate governance is all about promoting corporate fairness, transparency, and accountability. If we talk about its scope, it's a very wide, very large, as corporate governance also provides the framework for attaining a company's objectives, and it encompasses practically every sphere of the management, from action plans, policies, performance measurement, disclosures, and corporate reporting. So essentially, the board is at the helm of the affairs to dictate the corporate behavior and culture. And the company's board of directors is the primary actor in influencing and implementing the corporate governance through the establishment of the various the review, monitoring of the corporate governance, rules, controls, policies. So these are broadly the board's actions. So I think the corporate governance should be treated as a company's principles rather than an act. And the company should treat the corporate governance as a way of life rather than merely a code. If we have to say that what are the important constituents of the corporate governance, who are the key components, constituents of the corporate governance? They are essentially the shareholders, the board of directors, and the management. And as we discussed already, what are the three major aspects of the corporate governance? That is accountability, transparency, and equality of the treatment to all the shareholders. That is essentially the fairness. When we talk of corporate governance, the clear objective is to empower the board to set the culture, the value system in the organization, recognize and manage the conflict of interest, set the appetite, the risk, appetite for the risk, and manage the risk within the appetite. In the context of the financial sector of banks, when we talk of corporate governance, it assumes larger significance, as I feel that the improving the quality of governance in financial intermediaries is an important determinant in efficiency, in allocation of the resources, protection of the depositors' interest, and maintaining financial stability. So just to sum up that, the good corporate governance should be the ethical practices, transparency, ensuring shareholders' value, protecting minority shareholders' rights, adhering to the legal compliance governance, and of course, the sound risk management practices. And how do we achieve this? We achieve this through high level of the disclosures, appropriate governance structure, presence of the strong independent board, adequate committee structure, and means of the communications. So with that initial introduction about the corporate governance, I would just like to briefly narrate how in India the corporate governance evolved and how at various points of time the regulatory interventions came. So if in the context of the globalization and liberalization, we see that corporate governance has come mainly in the wake of this deregulation of the industry and the business. So with the rapid pace of the globalization, many of the companies have been forced to move international financial market for resources and subsequently face greater competition than before. So both policymakers and the business managers, they have become increasingly aware of the importance of the standards of the corporate governance once you are into the global ground. So if we look at how it evolved in the Indian context, the first was the Confederation of the Indian Industry, which came up with first voluntary code of corporate governance in 1998. It released a task force report entitled Desirable Corporate Governance, a code which outlined a series of the voluntary recommendations regarding best-in-class practices of the governance for the listed companies. Then the second initiative came by the SEBI, based on the Kumar Mangalam Committee report, which is now enshrined as a very landmark clause 49, clause 49 of the listing agreement. In early 1999, SEBI had set up the committee of under Sri Kumar Mangalam Birla, member SEBI board, to promote and raise the standards of good corporate governance. And the report submitted by the committee is the first and formal comprehensive attempt to evolve a code of corporate governance in the context of the governance in Indian companies, as well as the state of the capital market. The committee agreed that the fundamental objective of the corporate governance is the enhancement of the shareholders' value and keeping in view the interest of the minority shareholders. So the committee recommended mandatory and non-mandatory prescriptions. Mandatory recommendations were essentially related to composition of the board, then what will be the tenure of the board members, optimum combination of the executive and non-executive directors, how many should be in a listed company, how many in a company where chairman is a non-executive chairman, and how many should be directors where there is an executive chairman, then audit committee, remuneration committee, all this was commented by them. And the third initiative was the Narendra Chandra Committee, which submitted its report in 2002. Actually, the Satyam episode has prompted to relook at our entire corporate governance norms and how industry can go a step further through some voluntary measures. And with this mind, CII set up the task force under the Sri Naresh Chandra, and he recommended ways of further improving corporate governance standards. The recommendations of this task force evolved over a series of meetings, and it enumerates a set of voluntary recommendations with an objective to establish a standard of the probity and corporate governance in the corporates in Indian context. The recommendations in their report were aimed at listed companies and wholly owned subsidiaries of the listed companies. And then came the major initiative by SEBI, the Narayan Murthy Committee, which submitted its report in 2003. The SEBI Committee on Corporate Governance was constituted under the Narayan Murthy, who was chairman and the chief mentor of the Infosys, to suggest measures to improve the corporate governance standard, determine the role of the companies in responding to rumors and other price-sensitive information circulating in the market in order to enhance the transparency and integrity of the market. Then the major initiative, what I said about the clause 49 of the listing agreement to the Indian Stock Exchange that came into effect on 31st December 2005. It has been formulated for improvement of the corporate governance in all the listed companies. And the term clause 49 refers to the clause number 49 of the listing agreement between a company and the stock exchanges on which it is listed, either NSE or BSE. So clause 49 of the SEBI guidelines on corporate governance, as amended time to time, made major changes in the definition of the independent directors, strengthening the responsibilities of the audit committees, then improving the quality of the financial disclosures, and those related to the related party transactions, proceeds from the public and right and preferential issues, requiring the boards to adopt formal code of conduct, requiring the CEO and CFO certification of the financial statement, and so on. And one of the very important recommendations there was about the whistleblower policy and the restriction of the term of the independent directors. Then as far as banking sector is concerned, a discussion paper was brought by the RBI on governance in commercial banks on June 11, 2020 to review the framework of the corporate governance in commercial banks. And later, based on the feedback which came from the industry and other stakeholders, RBI issued a circular in April 2021 and given the interim directions to the banks relating to meetings of the board, constitution and composition of the role of the committees, like audit committee, remuneration committee, risk management committee, and who should be a chairman, whether the chairman of the board can be chairman of these committees. No. So there were so many guidelines on that. And the tenure of these committees, the remuneration of these committees, the qualification of the members of these committees. So RBI gave very exhaustive guidelines first time in 26 April 2021. And very recently on 27 July, RBI this year, RBI released a survey report on the climate risk and sustainable finance, which also indicates inter alia the governance and disclosures on important factors in the context of the climate risk and the sustainable finance, because it's the very important thing after the country has agreed. So with this brief, I would conclude my remarks with I would definitely like to say that in the social context, the social context, culture, religious, political, and legal system of the country should be blended while introducing and adopting the corporate governance system of a country. Thank you.
Thank you, Mr. Ishwar. I think you have briefed about the various committees constituted by the RBI and SEBI also. I think that is a major aspect you have touched about. You are also talking about the transparency and fairness and accountability. I think these are the major aspects. We will discuss in detail. Now I'm coming to respected Shri Amarjit Chopra. Shri Amarjit Chopra qualified as chartered accountant in the year 1975. He has successfully completed his PhD on the topic of NPA management in banks, a comparison of public and private sector in India in February 22. Mr. Chopra is having more than 46 years professional experience. And he is also teaching in Deshbandhu College in Delhi University, maintained college for nearly 25 years. Mr. Chopra has 5 consecutive terms, 3 years each beginning from 1998 and ending to 2013 as a Central Council members. He was also elected as president of Indian Institute, Chartered Accountant Institutes in the year 2011. He was nominated to Government of India on the board of Bank of Baroda in 2006-2009. He also nominated by the central government and chairman of National Advisory Committee on Accounting Standard for the period of 4 years. I think he has so many qualifications, so many boards, other things. He has also been conferred honorary membership by the Australian Institute of Chartered Accountant. He also been conferred honorary life membership by the International Association of Accountant London. He is a public writer and speaker. He has delivered more than 3,000 lecture on matter of professional interest in India and abroad. He is also roster of IMF as a resource person and has conducted mission in Mauritius. I think he is the board of Tata Power, Delhi Distribution Company, Tata Power Trading, and SBI Mutual Fund trustee companies, and so on and so forth. I think when I read it, it will take about 1 hour to me for read his qualification, other things. So I think Mr. Chopra is the right person to talk about the roles of the corporate governance in economic development of the country. I think this is a main subject of today, which Chopra ji, I think will be highlight to us. And I'm just mentioning here that the banker and professional people, professional person are very much interested to listen to Mr. Chopra for his views. They are written to me whether Chopra is coming in your webinar. I think it is a great pride for this webinar also. I request Chopra sir, please share your thoughts, sir. Thank you very much, Chopra sir.
Thank you, Gupta ji, for all your kind words. And of course, my greetings to old friends, Subbarao ji for that particular matter, and of course, meeting Feed Ahmad ji and Ishwar ji for the first time, and all other participants. I think the two speakers earlier have already highlighted what is corporate governance. To me, when you look at the governance, either in the corporate sector or at the country level, these are not two different things, very frankly. Whenever you talk of governance, you talk of certain ethical practices. You talk of certain practices by way of which the wealth of all the stakeholders can be enhanced, not necessarily the promoters, not necessarily the government. If the government also keeps on levying more of the taxes without actually spending it, that's also not a good governance on the part of the government for that matter. If I collect a particular tax in the name of a particular levy and I don't spend it on that, that's not also good governance for that matter. So whenever I talk of a governance, whenever we don't talk of misgovernance in any case, whenever we talk of governance, we talk of good governance only. Good governance will definitely mean one thing, that we have certain practices whereby, which whatever I was said by Subbarao ji and I can say Ishwar ji, transparency is there, the accountability is there, fair reporting is there, objectivity is there. I think there has to be no bias, there has to be no prejudice when you govern well in a particular organization. When you tend to promote certain people in the organization, you cannot say that he had a tip with me the last day, so I will not promote him. That's not the kind of the governance that you are looking at. You promote based upon the merit of the people in those circumstances. And these days, I think when we talk of it, it is definitely ensuring happiness to all. To me, one of the, I don't know why, in the Indian corporates or maybe world over, it could be the feature. We have never looked at what is the happiness index of our employees. If your attrition rate in the company is very high, that itself shows that your employees are dissatisfied and you cannot be governing the industry well, even if you are making good profits out of that. I think one of the very important features of the good governance is that your employees should be satisfied, the attrition rate should be low, and in that case, if your attrition rate is low, your continuity of the employees will render better quality of the products, better services of the better services to the consumers, and probably that will ensure better development of the country also. These days, I think when we talk of the governance, one angle which we cannot ignore under any circumstances for good governance is the sustainability. Sustainability does not necessarily mean the sustainability of the company, sustainability of the society, sustainability of the community for that particular matter. These days, the concept of environmental and social governance is there. I think more than corporate governance today, what we are talking of is the environmental and social governance, ESG, what we are talking of. Because what is important is that you run a particular organization, you are not running the organization for the short term, you are running the organization for the long term. If a particular organization is sustained over a period of time and you have the practices whereby sustainability of the society is ensured, you keep on creating pollution, that's not the desirable purpose, that's bad governance. And that is why probably Indian companies are buying carbon credits and someone else is able to sell you the carbon credits abroad. That's not going to be the spirit under any circumstances. I think the spirit has to be that you keep the environmental clean. The kind of air that we have in Delhi today, very frankly, which some of the governments may be saying that we want to make the best of the cities all over the world, better than Singapore city in the world. I think this is absolutely ridiculous. You have a level of 480, 470, 350. In Canada, if this level reaches 3, people start talking of what kind of environment we are living in. I think that is the kind of sustainability that needs to create. You can't keep on polluting the atmosphere. You can't keep on actually damaging the economic resources for that particular matter. So you can't keep on cutting the trees. I think whatever has happened to Bangalore, if I can talk of, It's bad governance both at the corporate level as well as at the government level for that matter. Because if you cut trees and you have been able to convert a particular beautiful city into a concrete jungle, I don't think that was the basis of any good corporate governance for that matter, or good governance at the government level also for that matter. The other thing that one will definitely like to say is that we constitute various committees as a part of the governance. We have nomination and remuneration committee, we have the audit committee, we have the risk management committee. Now, in one of the companies, without naming any of the companies, the risk management committee was constituted. The risk management committee constituted under the best of the doings of the industry for that matter. But that risk management committee did not meet for a period of 3 years. Is that the spirit of the corporate governance? I don't think that can be the spirit of the corporate governance under any circumstances for that matter. And one of the most important part of the governance today is looking at the related party transaction. Whatever has happened in the banking industry today, if you ask me, wherever the loans have gone bad, whether you talk of Diwan Housing or you talk of JP or you talk of Bhushan Steel, you talk of ILFF, in all those cases, I'm not talking of Satyam because Satyam is a much discussed case for that matter. I'm not talking of Malia because Malia is the poster boy basically. But why we don't discuss Jet Airways in any case. I think that's also a bad governance on the part of the bank. The banks keep on discussing Malia. The banks don't discuss Jet Airways at all. What happened in Jet Airways? Jet Airways is almost 25,000 crore. Malia was only 4,500 crores, which culminated along with the interest to the level up to 9,000 crore. And the gentleman in the Supreme Court said that I'm willing to pay you 69% or 89% of the total amount. So I personally feel when we talk of the governance has to assume a very different kind of a meaning, without prejudice, without bias, and objectivity has to be the hallmark for any kind of corporate governance and under those circumstances. My humble request will be, when we talk of the related party transaction, look at the Diwan Housing, the way the money has been siphoned off to the extent of more than 30,000 crores to the related parties. You look at Unitech for that particular matter, the way the money was siphoned off to the related parties for that matter. You look at the other companies also, wherever the failure has been there. Look, I think there, the related party transactions have been the bane of the entire problems, if you really ask me. Neither these transactions were at arm's length, nor these were desirable, if you really ask me. What was the audit committee doing in all those cases? I don't have the answer to that, basically. So, to my mind, today the most important committee is the audit committee in any company. But what is happening in the name of the governance? I think Subbarao-ji and Fareed-ji are there. I will definitely like to seek an answer whenever the audit committee happens in a particular bank also. It is immediately succeeded by a board meeting. And audit committee people don't get the time even to discuss the financial results. That's the factual position to be in. I think if you are holding an audit committee meeting, given the time to discuss the financial results, whenever we talk of governance, I think one of the very important aspects is, I think Gupta ji, you will appreciate whatever was said by Kumar Mangalam Birla, whatever has been said by Uday Kotak in their various reports. One of the most important part has been the independent director. But are the independent directors really independent? From where do these independent directors emerge? They are either known to the management or they are recommended by somebody to the management. So what happens, or by the promoters, if they come and then some of the directors, independent directors, are getting the kind of commission which they have not earned in their lifetime as the service. That is the factual position to be in. I don't want to name a particular organization in which a particular chairperson signed a particular agreement to open a payment bank with one of the industrial groups, and after 1 year of the retirement, that particular person joins the board of that particular group. Is that kind of the governance we are expecting, and we expect that this director is an independent, and the kind of commission that the independent director will be earning in those cases? I think we have lost track of the role of the independent directors, if you really ask me. In the ACB, if the independent director is a little bit vigilant, if today you have an audit committee chairman who does not know IFRS, let me put it this way, and without IFRS knowing, you cannot run an audit committee today. You cannot appreciate the financial statements today. I'm not saying necessarily that a chartered accountant needs to be the audit committee chairman, but definitely one needs to have the knowledge of the financial statements which he's looking at. And if it does not know that, what is going to be the case in those cases? I think the governance takes a hit in all those circumstances. So what one is trying to say is, let audit committee play its role, give its time, make the directors actually independent. It could be a state of mind. People say independence is a state of mind. To my mind, at least in the case of the independent directors, there is a need that in the top 500 companies of the country, somewhere you maintain a panel of the independent directors. The panel is maintained by the regulator, either by the MCA or by SEBI or by some other one authority. And then the independent directors are named their own depending upon their experience, etc. You can't have promoter recommended independent directors on the board. If you continue to have it, I think governance is going to take a hit in the circumstances. And when governance takes a hit, what happens? The bank suffers. I will say the bank suffers. When the bank suffers, it turns NPA. The company closes down. When the company closes down, the staff is laid off. When the staff is laid off, the salaries are not paid. The demand gets a hit for that particular matter. And whenever there is an NPA pressure, I think Subbarao talked of 20%. If there is a pressure on the banks for the NPA, the credit is bound to shrink. People will not like to lend in those circumstances. If the banks are not willing to lend, the expansion of the credit, and if the expansion of credit is not there, what is going to happen? The industrialization is going to suffer. The infrastructure is going to suffer. If all this is going to suffer, ultimately there are going to be mismatches between demand and supply. And if there are going to be mismatches between demand and supply, in that case, the inflation will go up, the interest rates will go up, the economic development is bound to suffer under those circumstances. I think what is more important under all these circumstances is somewhere or the other, we need to be very clear. There are about 6 pillars of the corporate governance in my mind. One is the promoter, shareholders, there's management, there are directors, including independent directors, there are regulators, and there are auditors. Auditors are a very important part of the pillar of the corporate governance. To my mind, all these 6 pillars of the corporate governance have failed the governance. They have failed the corporate governance, if you ask me. Promoters, for their own interest, have siphoned off the money. Shareholders have never shown interest in attending the AGMs and raising the valid issues. If you really ask me, in the various AGMs, I have not seen any shareholder raising a valid issue or a genuine issue in the case of in any AGM for that matter. So far as management is concerned, if you link their salaries in the form of the commission, basically to be paid to them with the profits, in that case, what kind of transparency, what kind of fair reporting you expect, I don't want to say. In the management that failed. To me, the most important is where the directors and independent directors have failed, both in the PSUs as well as in the private sector. Believe me, I think the entire system of appointing the independent directors on the public sector undertakings is also flawed. It is not only the independent directors being appointed in the private sector, which is flawed system. I think even the appointment of the independent directors on the board of the various banks or the various PSUs is also flawed, if you really ask me. Then the regulators. After all these banks have been audited for ages by the various RBI personnel. Why the RBI people were not able to find out the level of NPAs all this time, but for Mr. Rajan coming into picture and saying that asset quality review report has to be generated. Believe me one thing, Gupta ji and others, if Rajan had conducted the asset quality review report at a time when the economy was booming, this would have been a great blessing for the banking sector. Unfortunately, when the AQR was conducted, the economy was actually on a decline or in a stagnant mode. And that is where the things went bad. But at least he had the courage of conviction of finding out what is the exact level of NPA. That is the kind of governance that one had really expected from a regulator much longer back. What SEBI is doing today, for that matter, a share starts from rupees 10, goes up to 400 and then comes back to rupees 15. Why should it happen? How can a SEBI chairperson come to a particular public platform and say valuation is not going to be the responsibility of the SEBI? Then are you there as a postmaster only to receive the papers and to deliver the papers? I think that's not the intention under any circumstances. Valuation, after all, in the CCI regime, you used to have the valuation being done by the CCI for that matter. Why a Paytm issue has failed? Why it was not looked at what kind of valuation it is actually desirable in that particular case? Why SEBI should feel shy of valuing a particular issue? I think one can at least make a comment whether this valuation is reasonable or not. You will not say that exactly it is going to be 530 rupees, but you can have sensitivity analysis. After all, the banks in the case of the NPAs also do some kind of sensitivity analysis. So similar sensitivity analysis for the valuation purpose could be done by the SEBI also. I personally feel very concerned and very disturbed when the SEBI person comes and says that valuation is not our responsibility. Then if a particular person is coming at a valuation of 500 rupees and the share is not worth 15 rupees, who is responsible for it? Whom you are going to hold responsible tomorrow? Why not SEBI for that matter? Why do you want those papers to be filed before SEBI? Only for financial statements to be reported? I don't think that's the intention under any circumstances. And then the auditors, I think the auditors have also failed in a large measure so far as the governance part is concerned. The kind of reporting now, if you look at the new report format which has come and the schedule 3 which has undergone a change, I think tremendous changes have been brought. And now when the Caro will be read by the banker, then the schedule 3 will be read by the bankers. I think the kind of governance improvement you will see, that's the way I look at it. It's going to be a very different kind of financial statements, different kind of reporting. That's what I feel, and I only believe that in the years to come, we will have far more reliable financial statements, far more credible auditors' reports, and that will lead to a situation where there is no mistrust. Basically, there is no distrust from the financial statement. The banks will be able to lend, and the banks will be able to lend qualitatively. And when they will lend qualitatively, the companies will survive, and the companies will survive. The entire system is going to improve under those circumstances. I think it needless to say that if the companies don't survive, then it's a wastage of economic resources, it's a loss of employment, it's a consequential bottleneck in the supplies for that particular matter, and reduction in credit. And I will only like to end up on one note, basically, that any economic development depends upon the sustainability of a particular system, particular industry. And if the sustainability is not there, sustainability of the society is not there, I don't think that it can lead to a good corporate governance. Even in the various committees like Nomination Remuneration Committee, if the proposal comes before you that the remuneration of the MD is to be increased, and you say, okay, increase it, I don't think that is to be criteria. You have to evaluate whether that really deserves some kind of an enhancement or not. So every committee has got its own value. Every committee has got its own terms of reference. There is no denying the fact that clause 49 has done good service, but I think not much requires to be done in the days to come. But I am sure that the governance levels in India, it's not that the governance levels in India have only been bad. Lehman Brothers, 3 months before, nobody knew. Where was the risk management committee in Lehman Brothers? 3 months before, nobody knew that the company is going to fail altogether. Ultimately, the company failed. And what happened in Parmalat? What happened in WorldCom? What happened in Xerox? I think these are Tesco. These are all examples where you may have any kind of committees, whether in India or abroad, unless the people who man those committees Are people with objectivity? Are people with the integrity? Are people with action? I don't think the things are going to improve. So I don't blame only Indian system. I think worldwide the system has been the same. The auditors have created the same kind of ruckus. The directors have created same kind of ruckus. All these problems have been there world over, and India is no exception to that. But in India, I can tell you the kind of reporting which has been prescribed now by the Ministry of Corporate Affairs, world over, it is not there. World over, I can challenge it. I can say with a lot of conviction that kind of reporting is not there world over. So we are in a much better position right now, and probably in the years to come, we'll find the things improving very fast. Thank you very much.
Thank you, Chopra sir. Now I think you have given a positive ray that our system is very world over. We are the best system. And you also mentioning about the six pillars, sir, for which you are mentioning about the independent director roles and auditors. It is said, sir, auditor committee is a gatekeeper for the corporate governance, for effective corporate governance. Lekin, why this has role, this audit committee is not effective if we see in so many corporates where they have failed. I will not name the corporate, and somebody has also put under a question mark for you only. Why their auditor was failed for that? Another point somebody is raising, in a corporate, some driver, some maid servant or something like that, they are put under a board. Have any views around that respect, sir?
No, I will only like to say that, as I said, it all depends upon the person in the audit committee who is chairing and who are on the board or who are on the audit committee. It is not a matter of whether you have the audit committee or not. It's a matter of who mans the audit committee and how knowledgeable he is about the terms of reference of the audit committee and how he actually wants to take the things further. I think that's very important. So I will only like to say, so far as this particular part of the question is concerned, the auditors are invited to the audit committee. The internal auditors are invited to the audit committee. Or if they are not invited, I think they have to raise the issue that why we have not been invited to the audit committee.
Right.
So they are invited to the audit committee, and at that time they can raise all their points. Nobody stops them to raise their point. At least I sit on 6 of the boards, and in 5 of those I chair the audit committee. Believe me, I encourage the auditors to raise the issues, because when the auditors raise the issue, it is for our improvement of the company for that matter, and we have to take it in the right spirit. But yes, the auditor should also not talk. If it's a company of 2,000 crore turnover and the auditor starts raising an issue of 5,000 rupees or 2,000 rupees, I don't think that's the kind of maturity. Maturity is also very important. So what was the second question? I'm just forgetting. You had the second question also.
Second, this is one is the auditor, another is the independent director, what you are talking about. So selection of the independent director is somewhat also a problem.
I'm saying I was in one of the programs yesterday. There also I've said that, like I told about the independent directors, I've said that in companies where there's a substantial public interest, at least in the top 500 companies of the country, the auditor should be appointed out of a panel by SEBI or by MC or by C&A, as it happened in the case of the PSU. If you want to give independence to the auditors, otherwise, I don't want to say much about it.
Sir, you have rightly mentioned about the social governance. I think this is the most important issue. And we also talk about the financial statements about that. We also talk about the sustainability. I think for a financial statement, this association was formed, Association for Financial Advisor of India. I think if it will be recognized by the government or by the IB, I think it will play very important role, sir. Like we will try that something can be done from that. For economic growth also you have mentioned that if good corporate governance is there, definitely we can achieve the set target of 5 trillion economy as our honorable Prime Minister was telling like that. Sir, I will come back to you in respect of some question was there directly to you that we'll
Thank
ask
you.
at the end. Now I'm coming
Thank
to
you.
respected Dr. Fareed Ahmed, who is postgraduate in agriculture economics CRS, DICL, CIB. He is a former executive director of Punjab and Sindh Bank, presently working as a visiting faculty to National Institute of Bank Management, Pune, and Indian Institute of Management, Guwahati. He is postgraduate in agriculture economics and was a circle general manager with Corporation Bank before his promotion as executive director in Punjab and Sindh Bank in 2017 and retired in July 20 after serving 3.5 years. He was awarded PhD in 2017 as for his work title analysis and modeling of management in assets quality in public and private sector bank in India. In his thesis, he recommended his establishment of bad bank. I think he is the only person when I see that he had recommended to form a bad bank, which the government has considered, among others, improving assets quality in the banking system. His other academic qualifications include PG, D, CRS, DICL, CIB, and various other professional qualifications. He is credit of 12 publications in national and international journal and two research reports. He has conferred the Server Award as a distinction by the bank and external agency. So, sir, he is the right person to talk about the banking sector. Sir, please, sir, that's I am asking you. That Mr. Rao has raised one issue: the absence of corporate governance in the banking sector. So, what do you consider, sir? What do you think? How do you consider the corporate governance framework is different for the bank? And if you can outline the same, something different, sir. We were talking about the corporate governance in the banking sector. Something different is there, sir. Any view, sir? Please, sir.
Thank you, Gupta ji, and good evening to my friends. I'm audible?
Yes, sir.
Yes, sir. Yes, sir.
Yes, sir. Audible.
Thank you very much, Gupta ji, and good evening, friends. In fact, corporate governance in banks, it is definitely different from other corporates because banks' nature of business, complexity of its nature of business, complexity of its organization, and also the uniqueness of the bank balance sheets that itself makes it is very different from other corporates, and also it is more critical because a bank serves conflicting interest in comparison to other corporates, from equity holders to depositors, borrowers, and other customers. So good governance is very, very important for balancing those interests and also the need for the protection of the broad pool of stakeholders. In fact, because of the nature of their business, banks accept large amounts of uncollateralized public funds as deposits in their fiduciary capacity, and further they leverage through credit creation. In this activity itself, their nature of business is different from other corporates. And in fact, the presence of large and dispersed depositor base in the stakeholder group sets apart them from other corporates. So in these aspects, the corporate governance of banks is different from other corporates. Further to it, if we observe, the banks lubricate the wheels of real economy, and also they act as a conduits for the monetary policy transmission and constitutes the economy's payment settlement system. So by the very nature of their business, there is a complexity which requires a good corporate banking system. Moreover, banks are interconnected in diverse, complex, and oftentimes in opaque ways, underscoring their contagion potential. This is most important. If a corporate fails, the fallout can be restricted to the stakeholders. If a bank fails, the impact can spread rapidly through to other banks with a potentially serious consequences on the overall entire economy and also the financial system. So the bank's corporate governance is different from the other corporates. Here I want to touch upon 2-3 points as far as because Chopra ji has touched upon mostly on the credit aspects. As he has rightly said, after the introduction of the mandatory introduction of the Caro report, even the bankers, the processing officers or the sanctioning authorities, most particularly the processing officers, if they focus on the Caro report, it gives a lot of information about the corporate. They need not bother about other sources of information before going through the Caro report. Caro report, but what is practically happening till recent past is the bankers were not giving that much importance to insistence for the Caro report, because the companies also, they voluntarily, they will not submit the Caro report. So that is one thing. Second thing is independent directors, he commented. Before outlining the corporate governance procedure in the banks, I want to touch upon that also. As the independent directors to contribute to the development of the any corporate, including the banking industry or bank, they should be competent enough. They should have proper knowledge about that particular activity, and also they should have the skills. As he rightly said, a person who is heading a audit committee, he must know what is audit. He need not know the intricacies in depth. At least he must know what is audit, and he should have the priority of the issues which should be important from the point of view of the organization's development, and which will result in the contribution to the economy or otherwise, rather than discussing in the audit committee small issues which were pointed out by the internal auditors, leaving aside the big issues which are pointed out by the internal auditors or statutory auditors or central statutory auditors. So the appointment of the independent directors in the boards, including in any corporate, including bank, it is very, very important. And as given a suggestion, good suggestion as given by Chopra ji, that they should be selected from the panel by the people who are not related to the boards. In the most of the one of the challenges, in fact, the appointment of the independent directors in the private corporates is very, very challenging, because as you are telling that somebody has raised the question that car drivers, servant maids, husbands and all made that directors, may not be to that extent. Even their friends and relatives, most of the time a other director recommended some other person, they are appointing those independent directors. And when the management is appointing the independent directors, definitely those independent directors will not go against that management. In fact, as he has rightly said, there is no independent director, there are mostly the dependent directors, according to me. So these independent directors' influence will be there on the board's decisions only when they are really independent. So this coming to the banks, if you see, all economical agents tend to behave in a pro-cyclic manner, and banks are no exception. In case of banks, their pro-cyclic behavior hurts not just the bank alone, but the larger economy. As I said already, because of its impact on the other banks and also the macroeconomic impact. So the corporate governance in banks is very, very important, keeping in also the excellence, what they are expected from them by the stakeholders, that is customer satisfaction, return, product and services, return to the promoters, and also the social responsibilities towards the society. And so it requires a good corporate governance. Moreover, banks in general and the public sector banks, they have given an additional responsibility of the socio-economic development in our country. And the banks are managing the public funds. So they are having the additional responsibility to manage those funds in very judicious way by following the prudent practices. In that, the corporate governance plays a very important role. In the corporate governance of the bank, it includes in its ambit the relationship of a bank to its shareholders and also to the society. And as the definition goes, corporate governance definition goes, the promotion of fairness, transparency, and accountability, and a reference to mechanisms that are used to govern the management or govern the managers, and to ensure that the actions taken by them are inconsistent with the interest of the key stakeholder groups. That is most important. And the salient features may also include, as I said already, the issues of transparency and accountability, the legal and regulatory environment, appropriate risk management measures, as rightly pointed out by the Chopraji. It is not the question of having the risk management committee for the sake of name. It is required the risk management committee should play its role in true spirit. And also the information flows and the responsibility of the senior management and the board of directors. This is very, very important. The board of directors are the senior management may be looking after day-to-day affairs, and also there may be part of the board, but senior management and board of the directors should play very, very important by obtaining the information if information is not coming to the board from the management. The manner in which the board of directors governs the business and affairs of individual bank, and also their functional relationship with the senior management, plays a very important role in maintaining a good, effective system of corporate governance. In fact, it will, when there good corporate governance is there, definitely it will impose appropriate standards of code on managers and control and monitoring procedures in order to maximize the opportunities for the legitimate profits subject to the best interest of the depositors and other shareholders. In fact, the depositors are the weakest link in the stakeholders. So the lot of emphasis should be given to take care of the interest of the depositors by a bank, being a financial institutions which is having a very large and dispersed base of the depositors. In fact, there should be a great emphasis and also detailed guidance in the internal control functions, the so-called second and third defense lines of defense, risk management, compliance, and internal audit. In this way, the banks, no doubt, they are following the corporate governance, particularly for a past half a decade. There are a lot of improvements, and also the conduct of the board meetings, regular meetings of the bank boards are being conducted, and they are providing the insights in the business and also the functional matters and monitoring the bank's performance. And they are providing the strategic control, and continuously they are reviewing it for knowing its efficacy. In fact, the clearly documented and transparent management processes for policy development, implementation, review, and decision making, monitoring, and reporting. These areas has been improved a lot during the past few years in the banking industry. And also nowadays, the free flow of information, particularly only to the extent of relevant information, is being made to the board from time to time. In fact, the management is also having the full responsibility for all aspects of executive management, and it is accountable to the board and the shareholders. So senior, and not only that, after the regulators lot of insistence about the compliance and all, the compliance culture has been developed in the banking industry in the last 5 to 6 years, as I said. Now one of the senior most executive is made responsible in respect of compliances issues with all applicable statutes, regulations, and regulators, other procedures and policies laid down by SEBI, Government of India, or Reserve Bank of India. So there is a good development in the corporate governance. And also the Reserve Bank of India as a regulator has the responsibility and the nature of corporate governance in Indian banking sector. So they are following the corporate governance mechanism by 3 ways, according to me. Their disclosures and transparency as per the Basel norms, Basel 3, and also the regulatory norms given by the Reserve Bank of India independent of the Basel 3. Then offsite surveillance. And when the banks are going beyond certain limits, they are adopting the prompt corrective action. So this way, the Reserve Bank of India is also making efforts to improve the corporate governance in the banks. And the banks, particularly as compared to other corporates, the affairs of the banks are managed or governed by its committees, as stated earlier: audit committee, risk committee, shareholders committee, then remuneration and nomination committee, asset management, liability management committee, stakeholders relationship. All these, they are working, the affairs are being governed, but these committees must be strengthened. That will happen when the board is going to have the independent directors and other directors who are having the competency, skills, and talent about the financial institutions. Not for the namesake, somebody, suppose a woman director has to be appointed, somebody has been appointed, or somebody has to be appointed as in the interest of the government or somebody else. That will not take care of the strengthening these committees. And this mandatory and non-mandatory statutory disclosures are helping the public to know about banks to a large extent, because these disclosures are consisting of the moment of NPAs, asset quality, provisions, then penalties laid down by these investments made in non-performing investments. All those things are going to help, and they are being exposed to the public. So there is a lot of development. So according to me, effective corporate governance is critical for the proper functioning of a bank and the economy as a whole. The purpose of corporate governance in banking sector, without any doubt, to build and strengthen the accountability, credibility, trust, transparency, integrity, equitable and inclusive, effective and efficient it should be, and which follows the rules of the law. So this is in nutshell what are the difference from the other corporates, and also how that is the corporate governance is being followed in the banks. And there are certain improvements are required within that setup. Let us discuss at the end. Thank you.
Thank you very much, sir. What you are mentioning about the banking sector, sir, there is a lot of improvement. As you are talking about the monitoring of the and disclosure and following the regulations. And above all, you are also mentioning the property action, PCA. What is the banker? I think all the banking has come out of from the PCA. I think that was a great moves. So my point is, any challenges that banks are being faced or any corporate to adopt have a proper corporate governance. Now we are talking about the importance of the corporate governance, and I feel it is a must for the economic development. What we all speakers are talking about. So what are the challenges, sir? Have any challenges why we are adopting the corporate governance in the banking sector or any corporate, sir?
As far as the banking sector is concerned,
Sir,
particularly for a public sector,
sir.
if the formation of the board or selection of the members are not in the hands of bank, it is by the government, because being the owner of the bank, major owner of the bank is the government of India. As far as the corporates are concerned, other corporates, as we have already discussed, first of all is the selection of the members, getting the board right, and the selection of the board members. That itself is a challenge. They are there is no doubt that the capable board can improve the governance standards of a company, but the challenge lies in ingraining the governance in the corporate culture. That is the most important. In the true spirit, most of the companies in India tend to only do or comply only on paper. The procedure adopted in Indian corporates for selection of the board members itself is the biggest challenge for the good corporate governance, according to me. Secondly, there is a legal requirement for the performance evaluation of the directors, all the directors, whether the independent or others, but this is not being done in the true spirit. Or even if it is done, it is not being made public because of a bad negative impact the companies are thinking. Then, as we are already discussed about appointment of the independent directors, most of the time it is a very questionable in the other corporates, as it is appointed by the management or the promoters or the major shareholders. They are not taking into consideration their competency and others. As some questions raised, their friends, relatives, or known persons are on the recommendation of another director. Other independent directors are being appointed. I don't think so. These people are able to take up, or they will stand up in the board meetings for the interest of the minority shareholders against the promoter.
Very nicely, sir, you covered. There is one question for you, sir.
Tell me.
Role of corporate governance under present economic situation, showing sign of recession, slowdown, unemployment, reference to major banks. Have any views, sir, in that respect?
No, I could not get you. Can you repeat, please?
What he is mentioning, there is present economic situation showing sign of recession, slowdown, unemployment. In respect of the major banks, whether the banks are responsible for such a recession or a slowdown or unemployment, anything for that?
No, if you see one first step, mostly the question might have raised keeping in view the credit growth in the last few years is very slow. As Chopraji was telling, after the asset quality review, the NPS have been increased and the bankers have slowed down their credit growth. That may be one reason. Here, 1 or 2 points I want to share, and then I will continue my answer with that. In fact, if you see, as on March 2015, the NPA level was around 3.25 lakh crores. And the restructured accounts are about, under CDR, about 4 lakh crores. Those CDR accounts have done at the not if they at the instance, as per the regulatory guidelines of the Reserve Bank of India by the banks, and banks and the customers, borrowers, they have taken advantage of that regulatory special dispensation and kept them as a standard assets. If you combine that, at the beginning of the April 1st, 2015, when that special dispensation was removed, then itself the NPA positions of the banks is about 7 lakh crores. After that, it has reached to a maximum level of 10 lakhs plus in 2018. The incremental growth of NPS was only 3 lakh crores, subject to that write-off and all those things. So, asset quality review, definitely it has given a beginning to the bankers to follow properly, but not that entire 7 lakh crores were added because of this asset quality review. That is what I wanted to add. Second point, from then onwards, the bankers has slowed down the credit because everybody in Indian mentality, in our mentality, there is a herd mentality. Every promoter, every banker was after infrastructure and other projects, heavy investment projects during 2008 to 2011. And also the economy was booming. Everybody expected that the same returns will come. So it has not happened. Cyclic moments and also unutilized capacity, government rules, no permissions, clearance delayed, all those things led to the NPS. So promoters and bankers both slowed down the investments. So when promoters are not coming forward, banks cannot do the credit. However, if you see in the last 1 year, the credit growth is very good. It has, even for March, it has touched about 11.5 as compared to 21 March. Now for a June or August, it is about 16% credit growth is there. However, this credit growth is mainly contributed by, other than the project loans and others, personal loans and the retail loans are the main contributors. For the coming to the correct direct answer for that question is, in no way bankers are responsible according to me, because the economy is affected. The inflation reason is not even the local reasons. They are global reasons. Geopolitical situation, global financial markets uncertainties, and global supply chain uncertainty. These are the three reasons mainly for the inflation. Though the Reserve Bank of India is increasing the repo rate, it is the only tool with the Reserve Bank of India which they can control the inflation. Other fiscal measures are required by the government to control the inflation and also to inject the energy into the economy so that the investment will take place and bankers will also deploy the credit.
Very nicely, sir. You have covered all these. I think reply was excellent. I think you must be satisfied. So now I'm coming to respected Chopra sir. There are so many questions for you, sir. Chopra sir.
Yes, sir.
So, Chopra ji, if the audit point out something in next year, the form is replaced by a new auditor form. Chopra sir, if a audit form point out something, then next year the form is replaced by a new audit form. Mr. S.C. Agarwal. Have any views, sir? If something
No,
is
I can tell the gentleman whosoever has raised it.
sir.
The appointment of the auditors is for a period of 5 years. Let's be very clear now. It is not for a period of 1 year. And if at all the company wants to remove you in between, they have to go to the government. They have to go to the regional director. And if you are being removed because you are you can say an auditor who raised some issues and your qualifications were valid, RD is never going to allow you to be removed under any circumstances. That's the only answer that I can give.
And another question he's asking you: will there is a good corporate governance if the company is made a debt free by withdrawing investment from which there is no dividend or interest?
No, I personally feel, you see, this is not the right kind of a question. The reason being a debt-free company does not mean that the corporate governance is good. There has to be a proper leveraging also. After all, there is a debt equity ratio of 2:1, which is considered to be a fair ratio. And if you can actually service your interest, why not to do it? I personally feel leveraging is not bad. Taking loan is not bad, provided it's for productive purposes. And it is not being siphoned off, it is not being misutilized somewhere. So being, you can say, debt-free is not a very good sign also. At the same time, if you are not paying dividends, but these dividends are to be used for the purpose of either plowing back the profits to the development of the company, it's fine. But if the dividends are not being paid simply for the purpose of not being paid, I don't think retaining excessive cash is also bad. If you really ask me, why the shareholders should not be satisfied, or if the company has adopted a policy that every 5 years they will go for a bonus issue and that will increase the wealth of the shareholder, no harm in that also. So it will all depend upon the circumstances, case to case. There's no proper straight-jacketed answer to this question.
Very nice, sir.
Gupta ji.
I think we have already discussed this audit firm was the main culprit. I think we have already discussed. Chopra, another anonymous question is that you are talking about the driver. I think we also discussed this issue.
No, this driver part, I can tell you, in most of the cases, it has happened in the cases of the real estate companies, where they had their subsidiaries, etc. I can be very frank with that, where they had some joint ventures. The people who were not at all connected with the business, who were actually drivers, PMs, their wives, etc., have been taken onto the board. I think now these companies are more or less shell companies. A very large number of these shell companies have already been struck off from the roles of the you can say MCA records, and in the times to come. And now MCA has actually gone further into the detail. Now they are asking for the photograph, they are asking for the designation, everything. Let's be very clear, this particular part will also be taken care of in the times to come. I am very sure now no more drivers or PMs will be the directors on the boards.
Chopra sir, he asking you to please refer, okay, solution independent director or nothing. But I beg to remain, sir, your very obedient servant of the promoter of the companies. Independent.
No, independent director, I have already said that whether he is independent, I think Freeji raised the issue of complying something in, you can say in letter rather than in the spirit. There have been cases where the women director, now of course the women director cannot be from the promoter group. Earlier when you made it mandatory to have a women director on the board, there are bigger companies in this country who brought in the wives of the promoters as the directors on the board to comply with that. I think now that has also been taken care of by SEBI, wherein it has been said that you cannot have the wives of the promoters or the ladies connected with the promoters as being on the board to be counted as independent directors. So I think the times are changing. There will be improvements in the times to come. Yes, independent directors have not been able to play the role which they should have played. They have been just extending their arms to pick up some cashew nuts and put it into the mouth in some of the cases, which is exactly bad if you really ask me. But then there are certain very, very good independent directors. That also I can tell you. It is not that all the independent directors are bad in the system. I have worked with some of the most efficient, most, I can say, intelligent independent directors who have been raising issues. So it's both ways, but I think majority is on the other side, the wrong side of it.
Chopra, so many questions for you only. Chopra sir, why there is no failure of Baba Ramdev company?
No failure of Baba Ramdev.
Why is there not?
See, Baba Ramdev net worth because of Ruchi Soya today may be more than 30,000 crores, if you really ask me.
Yes, sir.
So I whatever one may say, he has actually shown one way that a Baba can also be an entrepreneur. And he is giving a challenge to companies like Hindustan Liver, etc. We can't deny that particular part under any circumstances.
He had done an excellent job.
Yeah.
Ahmed sir, Dr. Ahmed, Free sir, he asking you, in Satyam case, company case, independent director are highly qualified, but the company failed because it was a promoter of the company who was real owner of the company. Have any views, sir? Free sir?
Definitely, what he stated is correct. Independent directors are very respected and very, but whether the independent directors played their role independently, that is most important in such a case.
Sure.
Whether they have only at the last minute they have resigned or want to resign or want to leave the company, but they have not played their role properly. And those independent directors were literally appointed by whom? By the same management, by the same promoter.
Same management, same promoter.
So one more thing, Gupta ji, I will like to add to what Freeji has said.
Sir.
You see, in hindsight, whatever we may say, the things do happen. There's no doubt about it. But at that particular point of time, the promoter was like a demigod situation. People may or may not agree to that. Believe me, till the time he himself came to a situation that he had to admit that there is no cash in the company to the extent of 5,500 crore rupees. Till that time, he was considered to be demigod by the people. The kind of people, employment that he had generated, the kind of company he was running. Nobody could have thought, no independent director, no auditor could have thought that this kind of situation would arise in this particular company. But yes, there was some kind of a failure of the governance. There is no doubt about it. And of course, the auditors were penalized. that the two of the auditors have been debarred for their lifetime. Basically, two individuals were debarred for the lifetime. So I will only like to tell the gentleman who has asked the question. See, who thought that Anil Ambani could fail?
Yes.
Look at the Reliance Communication. Look at the Reliance Homes. Nobody thought at a particular point of time. But the kind of practices which took place there, I think these are unimaginable. Nobody could have thought that it can happen to such a kind of a group. So I personally feel at times independent directors are not. No, I don't think that any independent director in ILFS could have thought that ILFS is going to fail. Nobody could have thought of it. After all, look at the entire track record of ILFS. So there are situations where independent directors are also in for a surprise. There is no doubt about it. But yes, if the independent directors know the things that it is happening wrong and then they still keep quiet, I think they need to be punished in those cases.
Very much, sir. Chopra sir, before I wrap the session and request Mr. Subbarao to sum up. So I request you have any word for our participants, have any advice to them for a corporate governance?
My only advice to all the gentlemen who are participating is, even if you want to be independent directors on the board and part of the governance, don't feel shy of taking up the position. But go to the Google Baba, look at the track record of the promoter. I think that's very important. If a promoter has been raided in the last 5 years by the income tax people or by the GST people, keep away from it. But if he has a clean track record, the company has never been raided by income tax authorities, GST authorities, no such case of the customer, etc., pending against them. There's no harm in accepting the appointment and then being vigilant as you go across the on the board, for that matter. I have been very clear. I don't feel shy of getting onto the board, provided I've done due diligence about the company as such. I think that's very, very important. And more than the company, I do the due diligence about the promoter. I think that's very, very important.
I request Dr. Freed, have any views, sir? You can give some advice to the participants, sir?
No, yes, because here participants may be the people who are willing to be independent directors, and others are also there, maybe the officials and all. I want to tell them that corporate governance is very, very important, and it is a critical as far as other corporates and the banking industry as a whole, because this corporate governance is going to make the country to become nearer to the 5 trillion economy by following the ethics and also doing the business ethically. In that aspect, we should be vigilant, and we should be, in whatever role, we should play our role in the interest of not only our organization, in the interest of the society, and keeping also, as the banks and the corporates, they should keep global sustainable goals, and also the ESG, they have to kept in mind while doing the corporate governance policy.
Very nicely, sir. Ishwarji, have any view? Ishwarji, have any advice?
Yeah, nothing special advice, but just to supplement Chopraji on the one question which was raised about the debt-free company, whether it is an efficient company. But yes, what Chopraji said is right, and it is to supplement that, firm definitely would choose most efficient, tax efficient structure, and particularly they would look for a optimum mix of the debt and capital based on the cost efficiency. That's the most important. We cannot say that the debt-free companies merits very much. So just that I wanted to supplement.
Thank you. Now I am requesting Mr. Subbarao.
Guptaji.
Yes, sir.
Here also, I also want to add one thing.
Sir.
It is not the debt-free company or a debt company. Yes. Corporate governance is not related to only financial matters alone. Corporate governance is a broad policy or concept which is for the interest of all the stakeholders. As both of us, that Chopraji and Ishwarji has told, if you don't take the debt and don't expand, you are doing harm to the shareholders.
Yes.
And you are doing the harm to the economy by not creating the employment. You are not doing to the economy because harm to the economy because you are not increasing the business and not paying more tax to the government. So it is not the question of only financial matters. There are so many intricacies are involved. So debt free or debt company, whatever may be, it should have the broad aspects of the corporate governance.
Thank you, sir. Now, CA Subbarao, sir, please sum up and give your thoughts, sir.
Yeah.
Oh, sir.
Good evening, friends. We have covered very exhaustively about the corporate governance. Mr. Amarjit, Dr. Amarjit has been known to me for over perhaps 3.5 decades, right from central bank days. He has not changed his DNA. He has been brutally frank, expressing his views, whether it is liked by others or not. We need that type of tribe to increase in the society. Now, whatever we talk about this ritualistic compliances, finally the management and the middle level and senior level management, they should apply their mind and give their views freely, frankly, without any fear or favor. What has been happening, the decisions were taken by somebody and it is regularized by the middle and senior management. That should not happen hereafter. The person who exercises authority should also take the responsibility and he should also play a dominant role in the organization. Then things will improve. If a person is taking the decision and he is shying away from the accepting the accountability, that means he is misguiding his own staff. I have seen and I have experienced as a professor in this ITM, when I expressed 1 hour session on corporate governance to the middle and senior level management of one particular bank, that bank managing director has told me, if I depute my senior and middle level management to you for corporate governance session, I will not be in a position to run my bank. What is the reason he was telling? He has to be in a position to control his staff just like his paid servants. The middle and senior level management, they should not apply their mind. They should only carry out the directions, guidance given by the top man. If that is the level of governance, naturally public sector banks will run into problems. Now things are changing. People are applying their mind and they're putting their views freely, frankly, and expressing their views to the management. Sir, you have got every right to overrule us and take the decision. Henceforth, perhaps things will change. There will be dissent notes in most of the credit decision process. Perhaps Mr. Amarjit will endorse. All through, you go through any decision-making process, everything is recommended. Finally, the top man says, okay. When things go wrong, the people who have recommended they are being punished. The person who has okayed it is left scot-free. This is how things have been happening. Now things will undergo change. These things were happening even in US. But their Sarbanes-Oxley Act in 2002 was a US federal act that has come into operation to control corporate frauds. In India also, similar act has been passed, Public Company Accounting Reform and Investor Protection Act. And SEBI has been directed to control, regulate the operations of the corporates who are raising funds from the public. That's why now the chairperson of SEBI has been advising whatever price you are quoting, you have to have the explanation for it and you should justify user price. Only you quote a very high price and get the issue subscribed and finally you come into grief. Even the LIC issue, a public sector bank, it was issued at a certain price and after the listing of the company, the share price fell by over 25 to 30%. That means the pricing was not correct. The pricing was given only to please somebody else. That's why people who are exercising the decision-making process, they should be honest enough and ethically upright, and they should make the decision process very foolproof. And if they have got any negative views, they should put forth freely and frankly. Let the top man take the decision. Even ignoring this one, he has got every right to veto the decision. That's why things should undergo change. Perhaps things will certainly undergo change because the current dispensation, political dispensation, is also very favorable for improving the accounting standards. Otherwise, this Chartered Accountants of India, Mr. Chopraji will agree, now it has become a toothless tiger. Now, NFRA has come, it has taken all the powers. Then what is left with the institute? The great institute was set up in 1949.
Not all the powers. Subbarao, I would like to interject at this particular point of time.
Yeah.
Not all the powers. You see, what has happened is NAFRA has come into existence on a wrong notion, unfortunately.
Yes.
Nobody can stop it to happen. If the government decides on one day that Nirav Modi has happened, so we want a separate regulator. Now, many Nirav Modis have happened within the government also. I don't want to comment upon that basically. Now, somebody has gone and given an impression, no action has been taken in the case of Satyam. I'm telling you, in 2012 itself, we have debarred the 2 members for the lifetime. What else the institute could have done? But once the politicians or someone else decides that something is better, they do it. But so far as the powers to regulate the profession is concerned in respect of the cases other than which are with NAFRA, all other powers are still with the institute. So it's not that institute is a two-headed tiger. I don't agree with that.
Why? Because in my own personal experience, when I have written to the former president of the institute about one certain company, about the irregularities committed by the auditors and the bankers, he said, it is not my purview and I cannot interfere in the account. Then
I can tell you, Subbarao, I sat on the disciplinary committee for the last 4 years till 12th of February.
Correct.
In a large number of cases, I'm quoting it here on the forum. Large number of cases where the banks file the complaints against the concurrent auditors or against the statutory auditors. The bankers did not appear to justify their complaint. I am on record, I am willing to give an affidavit. And I told the institute to write to the Reserve Bank of India that when they file the complaint, why they don't come and justify the complaint. I think whatever the other president has said, I can't say that, but I as a past president can take up that responsibility of saying, and I own up that responsibility. It is not that we couldn't have taken action. Why the president said that he could not act, I don't want to comment upon that. But we can definitely act even today. And believe me, in some of the cases where the concurrent audit was not done in the right place, we have held the people guilty. I have sat on this disciplinary committee for the last 4 years till February this year.
That is, I wish many more Amarjis are there in every organization. Then things will certainly improve. I think Dr. Farid will agree with me. How many general managers, how many EDs are there to disown their managing director and tell them, sir, you are wrong, I cannot recommend this proposal. These are my views, you have got every right to overrule me, but I will not recommend what that pleases you. But even now, okay, things have improved a lot. But when we were holding the high positions, we encouraged people to put their views free and frankly. But many people they've only discouraged the middle and senior level management to put a negative note. That means they are playing the role of, of regularizing the decision of the top man. If that is also rectified by the audit committee, then things perhaps will improve, and already improved. In the current dispensation, things are improving, but still a lot to be done. And if this is done by everybody, perhaps things will improve. Now, finally, I only tell at the end of the day, the personal ethics that matter. Whatever regulations you bring, whatever rules and regulations you put in place, if the person who is going to implement is not ethically upright, nothing will happen. That's why what we have to emphasize, the decision-making process should be foolproof, and the persons who are processing the proposal, processing the note, processing the any decision, they should put their views freely and frankly without any bias. If that is done, perhaps things will certainly improve. We may achieve the $5 trillion economy in a very short period. But at the end, anyhow, everybody has contributed immensely for this corporate governance standards. But if corporate governance standards, if it is improved in every sector, not only in banking sector, corporate sector, and political sector, and things will look very bright. And perhaps I'm seeing the good signs, and things are improving, but it should improve further a lot. Now, so many regulations have come. Now, Mr. Chopraji has been upon the building sector. Now, after this, RERA has come, Real Estate Regulation Act. Things have improved a lot. Even in my own personal case, when the builder has terminated the allotment, on the play I put some objections, I filed a case in RERA. In RERA, chartered accountant also can file the cases. I fought the case and won against that great builder who engaged the best lawyer from South Bombay. That's why now things have changed a lot. People who are holding the high positions, high decision-making chairs, they're also viewing things in a proper perspective, and they're trying to do justice to everybody. If everybody tries to do justice to the organization, to the position he's holding, things will certainly improve. Okay, I wish to thank Mr. Amarjit. He has been brutally frank. I wish he continues to be like that, and he should punish the guilty auditors as well as guilty corporates so that things will improve.
Unfortunately, Subbarao, we don't have the powers to punish the corporates or anyone else for that matter.
Yeah.
Believe
At least you can highlight in your report.
Sometimes, sometimes we feel so bad that today, if you look at the banking situation, nobody is willing to enter into one-time settlement. No banker is willing to enter into one-time settlement.
Correct.
Because everyone fears that if I take a decision of 50% write-off, then some vigilance will be held against me. But at the same time, the same banker goes to NCLT and agrees to a
haircut of 70%, 70-80%.
Today, average write-off in the case of an NPA in the judgments is 70%. The first case went at 94%. So the problem is we have also lost our own individuality somewhere or the other.
That is what I'm telling.
That's the problem.
Yes.
Okay. Yeah.
That's why whatever we have, rules and regulations, if the persons who are going to take the decisions, they lack backbones, certainly things will remain as it is. That is the reason we wish Dr. Amarjit, Dr. Subbarao should be in every organization who can freely and frankly fight against the injustice. Finally, I thank Mr. K.K. Gupta ji for holding this type of webinar and inviting top class speakers, and their views will be certainly be appreciated by all your viewers. and whoso have listened. Anyhow, you are putting up this webinar on this YouTube or Facebook. People will see and appreciate our views, and they will be richly benefited by the views expressed here. I richly again thank Mr. Dr. Amarjit for his bold and frank views. Wherever he goes, he expresses in the same way. I wish he keeps up the same standard, and I hope Mr. K.K. Gupta holds this type of webinars many more in the times to come. Thank you, gentlemen. Thank you. Thank you, everybody.
Excellent, sir. Your speech, I can assure you that every week we are holding a webinar in respect of our associations and also for a Research in India banner. Till date, we have completed about 23 webinar under the association from this financial year. And under the Resurgent banner, we have completed 132 webinars. So we are holding a different webinar. This webinar was actually initiated by you when I talked.
Correct. Yes, yes.
And you told me, Lord Gupta, this is a good subject. You should hold the webinar, call the eminent speakers. I'm thankful to Subbarao sir for your
Thank you.
and for your guidance also. I am also thankful to Dr. Amarjit Chopra ji. I think he always say yes to me. Whenever I'm requesting him, so he used to say. And people also wondering that Chopra sir is coming to your webinar to address. I think people will be happy to listen to him. His very viewpoint. I think all participants must have get a benefit under his views point what he has given to us. And I am also thankful to Dr. Farid Ahmed. I think he was traveling. Like, I'm just telling him, sir, whether it's possible for you, you can address. So he told me that I will attend. I can no attend. Let you should be speaker for this program. I'm thankful to you, sir. So you always oblige me, although you are quite busy person, whether you are in Vijayawada or Hyderabad. I'm thankful to you. Today you also traveling somewhere. Still, you make it a day for me. I'm thankful to you, and I think participant must be happy with your views also. I'm also thankful to Mr. Ishwar, who is my good friend. We have worked together in the Central Bank of India, and under the IBA also used to meet him. He's also very, very intelligent person. And he taken all the question, other thing, and he helped me to draft the questions and also to talking points. So I'm thankful to Ishwar also. Above all, I'm thankful to all my participants because more than 500 session was there beside the YouTube. What Subbarao ji, you're mentioning about the YouTube, Facebook. So we are on the live on that. You can watch on the YouTube also. You can see the Facebook also. You can see the LinkedIn also. And that is online. People are attending that also. We will give you total feedback. How much person, how much appreciated. I think so many questions to respected Chopra sir, and he replied very, very clearly and very honestly for all the questions, sir. So for the association behalf, I'm thankful to you. This association was formed simply because we have more than 400 chartered accountant and financial analyst or financial person a member of that. The object of this association is only to share the knowledge in respect of various ongoing subject. And for Research in India also, whenever we are doing it, Research in India merchant banker, and we are also giving a debt syndication, and we are also conducting viability study for the bank. Besides that, we are also giving training to the bankers. I'm thankful to all the participants, all the eminent speakers who spare their times to us. Thank you very much. I am also lastly, I am sent to my field staff, Rohan, Mr. Surinder, and Mr. Farida sir, and other, you can say, my IT team who made this program as a very successful program. I'm thankful to Mr. Devas and Lokesh also. Although today is holiday for us as a resurgent also, they are still managing the show even late hours also. I'm thankful to these people also. Thank you very much, sir. I close this session with my thanks.
Thank you. Thank you. Thank you. Thank you.
Thank you, Gupta.
Thank you. Thank you. Thank you, Ishwar. Thank you, Amarjit. Thank you, Dr. Farid. Thank you.